Yeah, hello everybody. My name is Luke McBain. I'm here with my brother Chad McBain, and together we're two brothers and Bitcoin. Hi, Chad. How are you?
I'm good. How are you?
I'm pretty awesome. We got wonderful weather today in Berlin. I went swimming yesterday, and you sent me also an interesting video. You brought us something very special, I think. And I would just like to share that. Let's have a look what you brought us here. Um, yeah, so you sent me a video and said, "Look at this. This could be interesting." And this is from the Bitcoin conference from this year. It's like an annual conference, and we see a gentleman here who's called Michael Saylor. Now, for people who are maybe not up to speed, like, could you, before we look at it, could you first, I mean, tell us what is the Bitcoin conference and who is Michael Saylor? Because and why did you choose Michael Saylor? Because there was also Donald Trump speaking at the Bitcoin conference and Robert Kennedy Jr. And those two are fairly well known. I think people who are not into Bitcoin know Trump and Kennedy Jr., but not everybody might know Michael Saylor. So I have three
Right.
questions. Can you just enlighten us on what is the Bitcoin conference? Why is it important? And who's Michael Saylor, and why did you choose him and his speech and not the speech by Trump or Kennedy?
Sure. Um, so I'll take those one at a time. First of all, why not Trump? Well, I prefer to leave politics out of most of the discussions that we have, although when you're talking about global finance, money, Bitcoin, it's going to come up. I didn't think that Trump said anything in his speech, in my opinion, that was worthy of any discussion here. He's maintained for the last couple months that he's pro Bitcoin, and that's basically all he said. Robert F. Kennedy Jr. I thought had a very impressive speech, um, and for anybody who's interested, just go to YouTube and type in RFK Jr. Bitcoin speech or Bitcoin Nashville speech. And you'll find it. It's about 30, 35 minutes. And I thought it was a great presentation. But again, it was very political. And although I did find it very interesting, and it's very clear to me that RFK Jr. has spent a lot of time researching Bitcoin and putting a lot of thought into it. Michael Saylor. Michael Saylor is a gentleman who is a U.S. business person who has a company called MicroStrategy. And when the pandemic, or I guess when the lockdowns started in early to mid 2020, um, he looked around and saw the amount of money printing that was going on and markets crashing all over and decided, after a lot of research, the safest thing for him to put the company's treasury in was Bitcoin. Long story short, over the last, I guess, 4 years almost to the day, because I think it was August 2020 that they bought their first Bitcoin. Um, they have invested heavily in Bitcoin over the years, and I believe their investment is currently somewhere in the $4 to $4.5 billion mark um, into Bitcoin. And currently, they hold between 14 and 15 billion dollars worth of Bitcoin. So the investment has been very lucrative for them. Not only did it safeguard the company's treasury, it's grown it exponentially. So that's kind of, in a nutshell, who Michael Saylor is. He's well known in the Bitcoin community. He's an American billionaire and somebody that believes that Bitcoin is probably the answer to all of our troubles from a financial perspective. Not necessarily all the troubles in the world, but yeah.
Yeah, that's very interesting. Like also his like let's say his bio, being a CEO of, as far as I understood it, actually a software development company like MicroStrategy,
Yes.
right? Is that, I mean, he's not longer the CEO anymore.
Uh,
He now stepped.
he's yeah,
Yeah.
he's executive chairman. He did step down as CEO about a year or two ago. But he is the executive chairman and he is the single largest shareholder in the company. And actually, my understanding is has enough shares to basically still do whatever he wants because he has the controlling shares in the company. Yeah.
Yeah, and it's interesting that he went from this from being the CEO of a software development company, basically as he says himself, to a Bitcoin advocate. Like he also
Right.
said, like he stepped away from being the CEO because he wants to focus on Bitcoin and Bitcoin advocacy, and that's also an interesting, I don't know, trajectory within life to say, okay, I used to develop software, but now I'm focusing on Bitcoin. And this Bitcoin conference is also interesting that this year there were two presidential candidates speaking. I mean, it's not like not every conference in the world, I don't know, whatever you might want to, have a conference on, and there's many conferences on many topics, probably also on real estate where you come from. I'm sure there's many conferences, but you don't have many conferences where there are two presidential candidates who are going to speak at the conference just before the elections.
Yeah.
Yeah, that's unusual, I would say. But why is that happening? And why is this conference so important? Like, why is this venue so important?
Well, I think that's a fantastic point. I think the fact that there were two presidential candidates speaking, who, at least according to the polls, probably control about 70% of the popular vote right now. Polls can change. Um, the fact that two of them are speaking, and my understanding is there was conversations with the Harris team, Kamala Harris's team, but that was the same week that she had been kind of given the go ahead from the Biden administration. So I think it was a busy week for Kamala Harris. I don't know what she would have said anyway, because the Democrats have been pretty hostile towards Bitcoin. But there are indications that maybe that's changing with a different administration potentially. I don't know. But the fact that two of the three were there and the third was at least in contact with the team hosting the event is phenomenal, really, when you think about it. In an election year, 3 months before the election, I'm sure these people are very busy. And the fact that they either were there or considered being there, I think speaks volumes as to where Bitcoin really is in the conversation at high levels. And what I would say to anybody who watches these podcasts is think about that for a second and then just ask yourself if these people are having at least serious discussions about the impact of Bitcoin in a positive way on nation states. Maybe it's something you should consider for yourself and do some research. That's all I would say. Yeah.
Well, I agree. And apparently the Bitcoin conference is the place to be if you are interested or if you are involved in Bitcoin in any way, like be it at the political level or as an investor or a developer. That's where people meet, apparently. And let's have a look what Michael Saylor has to say in his keynote speech. And you selected some areas which you find most interesting, and we'll just jump right in and then discuss them as we go along. Let's have a listen.
Many individuals and most corporations, they use financial assets to preserve capital. And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long-duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg.
So here, I mean, that's fairly straightforward. He's talking about inflation and how your assets, if you invest them well, if you invest your money in certain assets, how that decays over time. Did I get that right? So that's the first part of his statement, basically.
Basically, yeah.
And he sort of like compares it to certain currencies and treasury.
And your standard typical investments.
Which is weird for me to hear. Like, that's the first time I hear that. Even if you invest in as far as I understood now, mutual fund, that only will give you 100 years to preserve your money. And after 100 years, that's basically, it is decayed or gone, or I didn't quite understand that part. So there's nothing you always have the impression if you invest into funds or mutual funds that somehow your assets actually increase over time. Yeah. But no, he's saying, no, that's not happening.
No, they don't. And I remember just a few years ago, I started to figure this out. It's before I actually started looking at Bitcoin. But I started to think, for the first 45 years or 50 years of my life, I've been told by the Canadian government, and you heard it from the US Fed, and you would hear it out of the UK and Europe, 2% annual inflation rate was their target. All the Western countries were going for 2%. And one day it just hit me that if you inflate away the purchasing power of my money 2% every year, and I guess I was approaching 50, and this is what made me think of it. I thought, oh my God, in my lifespan so far, 100% of the value of my money when I was born is gone. So even at the old, let's achieve 2% inflation, over a 50-year period, the value of your money had evaporated. And then I went and I started looking at the house prices from 40 or 50 years earlier, and car prices from 40 and 50 years earlier. And it didn't take me too long to realize that this is horrible. And it wasn't happening to me, it's happening to all of us. So anyway, I think Michael Saylor, clearly an MIT graduate, much more intelligent than I am, explained this very succinctly and compared it to many different things. But even as a layperson, I looked at this a few years ago without even thinking about Bitcoin, and just thought, even at 2%, it only takes a certain amount of time for the value of your dollar to be devaluated to virtually nothing. Yeah. Anyway, sorry, go ahead.
Yeah, let's see. Well, let's again the part about that, if you keep it in currency in your bank account, that inflation will sort of like eat up its purchasing power. I think a lot of people are somehow aware of that, and they're aware that they have to invest it in something. But I wasn't aware that even if you invested in something, then even there the purchasing power is being decreased over time. So that was like, he makes some math there. I couldn't quite follow it, but apparently that is the case. It's just a question of how much time are we looking at, like 25 years or 100 years or on. So let's see what apparently there is. But I mean, he's probably now pivoting towards an answer to the question, well, what do you do in that case? But let's have a look. Let's have a look how he continues.
You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes: income tax, capital gains tax. Every time you vibrate and move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics, catastrophe. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts, through the Lancasters and the Yorks, and eventually found its way to the Hanover family. And so maybe 7 different families split that. None of them got to take it with them. So physical assets you might think might last 1,000 years. Probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it. Physical capital is not a simple solution.
Okay, so in the like as far as I get it now, okay, first are financial assets, and the other are now he's making the case for, or rather against, physical assets, and telling us, well, if you're not into financial assets, how do you preserve your capital? Where you can buy stuff like cars or yachts or villas or properties,
Right.
and what happens to that stuff over time? Does that really preserve your capital? And yeah, the point he was making, I think here, but also previously, I sort of missed that, is the whole taxation thing, right? So even if you say, okay, well, I found a way to preserve my capital, well, along comes the state and starts taxing you, and you know what I mean? Then it's gone. And yeah, and all this thing about what he lists in terms of problems which could come when you have a piece of property. Rent control, price control, somebody slips and falls or something like that. And those are good points, yeah. So all sorts of risks which are involved when you have physical assets.
Yeah, and as somebody who's made his livelihood in real estate for many decades now, I'd always thought that that was the best investment for most people anyway. But I think his point is it's better than, a lot of the financial assets. But when you take into consideration all the taxes he just mentioned, but also the upkeep of the property, the maintenance of the property, if it's your primary home, if it's an investment home, not only do you have all that, but then you have the tenancy to deal with. And there's good tenants and bad tenants can cause a lot of financial and emotional problems. So when you look at it, your typical home built today is probably built-in obsolescence is probably somewhere in the 20 to 25 year period. So every 20 to 25 years, you're essentially redoing major parts of that home. So it wouldn't take too many decades to basically your investment, although financially it looks like it's still there, you've actually invested far more into the upkeep of the home than you did in the original purchase of the home. So even real estate, I think, is a better way than a lot of the financial assets that he talked about in the previous segment. But at the end of the day, yeah, it's probably only good for a few decades, and then you start to really be upside down on your investment.
Well, that's a fairly pessimistic outlook. I mean, of course, he's talking about time spans where many of us, and also those who might be watching or listening, probably are not even going to experience, like 50 years. Maybe somebody who's 20 could experience the next 50 years, but if you're already 50 or 40 or something like that, or even he talks about 100, like one of the oldest farms being like in family ownership for 170 years or something like that. So somebody who's watching and going like, okay, well, I don't want to preserve my capital for 50 years. Like I'm not thinking along that time horizon. So
Yeah.
that might raise a question.
I would say two things to that.
Hmm.
There's plenty of statistics out there now that suggest if you make it to 50 healthy, then you're probably going to live to between 85 and 90. So if you're 50, you probably have 35 to 40 years ahead of you. So you actually do need to consider that. And then the most obvious thing, which I'll say second, is that's great if you think you only have 20 or 25 years left, but are you giving no consideration to your children? You know, so I think most people do worry about their family after they leave. I mean, yeah, maybe we don't want to set our children up. You know, we do want them to get out there and do something, but at the same time, you also want to try and protect them, protect grandchildren, and leave something to them. So I think it still matters, even if you are 50 or 60 years old, because if you're relatively healthy, you probably still have 2 or 3 decades ahead of you. And even if you're not thinking about that, I think most people have family that they also would like to leave something to.
Well, that's an excellent point. Yeah, absolutely. I think a lot of people think that way and say, okay, how do I pass whatever I earn in my lifetime onto my children, onto the next generation, and what would be a good format to do that? And yeah, well, thinking of Bitcoin right now, I mean, as you said, when you just started talking about taxes, I said, well, maybe they still haven't figured out that they need to tax Bitcoin even more than what is actually happening right now, because up to now, at least here in Germany, there's not a lot of taxation going on. Basically, I think if you keep it on the exchange for a year, the gains are basically tax free. But let's see what happens. Yeah, as he points out, like governments are very creative when it comes to taxation. Yeah, but she points out in terms of property taxes. Yeah, that's a good point. Like, yeah, annual property taxes and all that. So
Yeah.
let's have a, so here let's see what he says in the next segment.
In the sense that it's not in the physical world, it's not suffering from all of those parade of horribles that are the scourge of financial and physical assets.
So here he's talking about Bitcoin, right? Maybe we
Yes.
missed the first couple of seconds here. Here, let's say here it says Bitcoin is immortal, immutable, and immaterial capital. Let's start from here. Just a couple of seconds earlier.
He gave it away, and he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created. Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is the solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. You know, by the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch. You know, and so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas, or owning the bar of gold, or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction. So let's talk about some great trades in history, some trillion-dollar trades.
So, yeah, okay. He's making a strong point for Bitcoin. I think the argument is sort of clear he's making here. Like, it's very his presentation is pretty good. Like the case he's making for Bitcoin. Although, again, I would argue that, well, it's all about preservation of capital over time, right? This is not so much about how to make a profit or how to become rich in 3 years. That's not the point he's making. And although he's talking a lot about trade, trade this for that, trade the melting ice cream cone against the peso and the peso against the dollar and all that. I think I get that part, but trading is not only getting the more, let's say, sustainable asset.
Yeah, so I look at that in a couple of ways. One, the vast majority of the presentation has been on preserving your wealth or preserving your energy, quite frankly. And what I mean by that is the way the vast majority of us earn money is by giving of our time and our energy in some way, shape, or form, whether that be physical or mental. So how do you maintain what you get in return is currency. So how do you maintain that over a long period of time? And so I think that's really the time preference of Bitcoin is just so much better than the rest. Now, the second part that you bring up is, I think what he's saying is today, tomorrow, next year, the next few years, maybe the next decade, if you're seeing this and watching this, this is the time to take whatever percentage of your savings or your investable investment portfolio or whatever, and start accumulating this, because that energy, that money, that currency that you're accumulating will last a lot longer when invested in Bitcoin than in any of the other things that he's discussed in the previous segments. So I think that's where he's going with that. And I'm not going to get too much into the AI stuff, other than, you and I have talked about this, and many people, I think, realize this, is we are moving into a digital world, and have been for probably about a decade now, and that's accelerating. It's not even maintaining, it's accelerating. And Bitcoin is a digital commodity and a digital asset that will make, if it makes sense today, it's going to make a lot more sense 10 years from now, when we are so much more invested in the digital world and therefore a digital economy. So anyway, that's my short take on that.
So it's yeah, it's again like I think also makes a very good case in terms of like how to preserve value over time and over what time horizons can you actually preserve value. And so that's basically his presentation, and then he compares all these different assets, and of course he makes a very strong case for Bitcoin. And the thing is that in terms of Bitcoin education and advocacy, which is his field, it's an interesting point to make, because a lot of people, well, one of the first things people say when you talk to them about Bitcoin is, well, the fluctuations. Isn't that crazy? Like then it goes down 4% or 10% and goes up again 3%, and like all these fluctuations. So people perceive this in the short term as something very risky, which basically can destroy value or increase value. And of course, you also have like friends or acquaintances who then risk a little bit of something and invest in Bitcoin. And then they say, oh, I made $20 or I made $50 off my investment.
Sure.
So I got off the exchange. Now I'm $50 richer. And they're very happy about that. So they still, I think the perception of a lot of people is this is basically like a speculative asset where you can, get rich quick, sort of like. And this is what the image still, crypto and Bitcoin is not similar as crypto, but we won't get into that, has. So, and he's saying, no, this is not about speculation. This is not about a get rich quick scheme. This is how to preserve value in time. That's the case he's making.
And so I think back to your point at the top of the podcast is, look, I understand that and this is kind of the point of this podcast, is to help in any way that we can educate people. But at the end of the day, your point at the beginning of the podcast was, are you really going to have the leading presidential candidate as well as another presidential candidate speaking at a conference for get rich quick schemes? And also Kamala Harris's team was apparently trying to figure out how to be there as well, if not in person, then by Zoom. And it's just logistically, it just wasn't possible on short notice, because she had just found out that week that she was probably going to be the front runner for the Democratic Party. So you could argue that all three presidential candidates in one way, shape, or form wanted to have some input at this conference. I don't think presidential candidates from three different parties, all leading contenders, want to waste their time on get rich quick schemes.
Mm.
So if you don't want to talk about how long it's been around and its progress, we can at least have that conversation about, a lot of people at high level are taking this seriously. The largest investment, I guess, company in the world, BlackRock, has taken this very seriously. Fidelity, I mean, all of the big players in the financial investment world. It's probably time to start thinking about it as maybe something else other than a get rich quick scheme. And again, do your own research, but just look at the signs that are out there all around you. Don't listen to what they say, watch what they're doing. And why are they speaking at this conference if there's not a lot more to this?
Right. I think I think that's a good takeaway from that. We still have some more actually. So, but we're going to split this into two parts. So this was like part one of the Michael Saylor keynote speech, but we'll continue in a part two and look at more what he said. But I think, this was an interesting takeaway that when you're thinking Bitcoin, think long term, right?
Yeah.
I think that's if you want to like really say one sentence about what he's trying to talk about, is think long term. And this is what we're talking about. Think big, long, not short and quick and like in this way.
Well, and if we use the most traditional asset of probably the last few hundred years, which would be real estate, land, if you will, real estate, we've always been taught to think long term with that anyway. So you're just taking that mindset and applying it to something in the digital world. Yeah,
amazing. All right, so thanks for bringing that. We'll see you in the second part of
perfect,
the Michael Saylor keynote speech. So have hang tight, and everybody who's interested, look at part 2. See you there.
See you in a bit.